Thank you, my brother. Thank you. I love you.
Please record this.
Yes, we are now recording. So first thing you gotta have to put in a trade alert is the Telegram trade alert app, right? So that is the app that is linked to Telegram, and you can download it right to your phone. So just go to your Play Store, type in Telegram, and you'll see exactly what I'm talking about. When you see Telegram, it looks like a little paper airplane. Okay, and then I'll show you how to get into this private group, right? We have a private group for these trade alerts. Why? Why is it private? Because we pay for this, right? So you don't want to give anybody access to our trade alerts because we're paying for a subscription. And obviously there's value in that subscription. So we all want to make this private. Now, to our team members, when they join, how do they get the Telegram app? It's in our Facebook Millionaire March group. So if you haven't joined the Millionaire March group, make sure you have someone in the organization send you an invite who's already in it. All you got to do is click this invite. Let me close this. When you click the invite, right, you just type your friends' names and it'll invite them to the group. Don't invite people to the group that haven't done what? Haven't joined. Because I post not just Tradera's trade alerts, I actually post day alerts. These aren't quick trades. Sometimes these trades can last a day or two. That's why I put intraday trade alerts, because it can go into and out of a full day. And of course, you always want to use proper risk management, which you'll learn that in your back office, what lot size means. Lot size is important depending on how much of your purse you're willing to risk. So you're going to see that on every one of my posts. Use proper risk management. But these alerts aren't Tradera's. These are some that I pay for outside of Tradera to add more value to our group, right? So again, we don't want to have people in the group that haven't joined us because they're getting free value. And so that's important. Now, so get invited to this group. Once you're in here, this is the resource you're going to have to get everything we're talking about. This is the actual place. Everybody needs to know this when they join. Why? Because this is where all their resources are. Number one, fast start training. I'm going to replace that one with a new one I just saw today. But these are things that people need to know how to get started fast. Somebody's in the chat. Let me see. Could you please invite me to the Facebook group? Yes, Bridge. Queen, can you add or send Bridge the invite to the Facebook group? If you can. I'm not sure if Bridge and I are Facebook friends. In order to invite somebody, you got to be Facebook friends. And I can accept your friendship. Go ahead and send me a friend request, Bridge, and I can do it. Or Queen, if you don't mind. So again, number one, video. Number two, Tradera launch manual. Number three, how to make a trade. So this YouTube video explains how to put in the stop loss and take profit. We're about to cover it, but I just want you to know where you can hear it more and more, right? And I'm going to record this. This is actually being recorded, so you're going to see this again over and over if you choose. Number four, extremely important. Once you download the Telegram app to your phone, Telegram app has to be downloaded to your phone. Then you come in here and click on this number 4 link, which takes you right to the trade alert chat, and join the trade alerts. So guess what? You'll be getting right to your phone. These trade alerts every single day, Monday through Friday, right? These trade alerts will be coming out to your phone, and they give you everything you need. Stop loss and take profit. Now let me explain take profit 1, 2, and 3. These are the parameters that say, okay, if the price pair, the euro US dollar, gets to 1.16297, the MetaTrader 4 app will take you out of the trade and put your profit in your bag, right? That's called taking profit. You could be asleep, you could be at work, you could be driving down the road. As long as you put in a stop loss and a take profit, you don't have to watch the trade. That's the point of having a stop loss and take profit. It puts parameters on your trade to take you out of the trade when you're losing too much, and take you out of the trade once you've won what you want to win, right? So take profit 1 is the first profit margin, which is the least amount of profit, but it's the safest and the least risky trade, because if you're staying in longer, that's more risk, right? Meaning you have to wait for it to get to a higher price point. And take profit 3 is the highest, right? So you got low, medium, high profit, which also determines your risk, low, medium, and high risk, right? So you want to manage that yourself. If you want to do 2 trades, you can do that, right? And you can say, I'll do take profit 1 and take profit 2, maybe at a smaller lot size in case I don't make it to take profit 2. That's all up to who? You, the investor. Nobody, Tradera, or none of us as coaches tell you what to actually trade with in your own bag, right? That's your money. You determine that. What you want to learn is what the risk management parameters mean and how they make sense to what you want to wager. Okay, so let's jump right into the MetaTrader 4. Okay, so I just showed you how to get the trade alerts, right? That's number 4 in the announcements tab in the Millionaire March. How do you find that? First, you join Millionaire March, then you go on the menu tab above and you click announcements. On announcements, you'll see that pre-posted, pinned posted alert right here. This announcement is pinned to the top, so you'll see it every time. And it has everything you need, right? So number 3, how to make a trade on MetaTrader 4. Number 4, trade alert group. You gotta have it. If you don't get your new people started with that, you're doing them a disservice because they don't even have what they paid for, right? They're not getting the ability to put in the trade alerts. Of course, they come to your back office account, but if you're not logged into the back office, you'd never see them. And most of us wouldn't be, right? But your phone is on your hip all day and you look at it probably, if I had to guess, and you're like me, well, I'm probably not the normal, but you look at your phone, let's just say 3 or 4 times an hour, which I'm sure most of us do, right? You'll catch that trade alert in enough time to make that trade, right? Now, if you're an hour, 2 hours away from the trade alert, you probably don't want to take it. But once you're experienced and you understand where it is in that alert, right? If it's actually did a pullback and you can get back in the trade, or if it's gone higher than the actual take profit and is ready to drop, you might still take the trade in the opposite direction. Those are things you're gonna have to learn over time. Right now, I think everybody should just start with a demo account and practice putting in the trade alerts on your demo and not so much worry about anything else other than learning how to put them in. And then you can start learning the skill set of support, resistance, trend lines, reversals, and those things that are all in your education. And guess who talks about it every Saturday at 11 o'clock? Mr. Dan Allen. He breaks down the trade alerts so you can see exactly what happened, okay? So let's get into MetaTrader 4. Hopefully you've already downloaded it. If you haven't, we'll still be here when you get it downloaded. I've given you the parameters for the MT4. Remember, it's a MetaTrader 4 Pro demo, MetaTrader 4 Pro demo. It's all in the chat. And it's also the US dollar. If you're in the US, right, you're trading in the US dollar, and your leverage should be 1-to-1. As little leverage as possible as you're practicing. You don't want to use the bank's money. That's leverage, and it can wipe your balance out. So that's another thing you can study is leverage in your back office training, understanding what leverage is. So here's the MetaTrader 4 on the laptop. I'm going to show it to you on the phone. I'll have to turn my camera on so you guys can see that. But guess what it does on the phone? It takes this section over here. If you're looking, these are the trading pairs. All the currency pairs are over here. Your chart is in the middle. And if you're looking to grab a charting, a currency pair, right, you're going to go over here and double click on it. Now watch what happens when I double click on the GBP JPY. That's the British pound Japanese yen. When I double click, it pulls up the order page, right? So now I can place an order, put my stop loss where? On the stop loss line. Where do I put my take profit? Right here. Where do I get those numbers? from the trade alert, stop loss, take profit, right? And all I have to do is plug that in on the actual trading platform, whatever that stop loss number was, exactly how it's placed in there, right? You want to use the decimal in the place that it's supposed to be, right? And this isn't the same trade. I just pulled this up, but I guess I should go to the actual trade. So let's go to the Euro USD, right? I'm going to go back, get out of this, and take it to the Euro USD pair. So I'm going to open up an order for the Euro USD. And now I can put the stop loss, take profit in there. Now on your phone, guess what? It doesn't show this whole charting. It just has your currency pairs. Let me see, make sure you guys can see this. Let me swap around. So you see all the same currency pairs, and what are we looking for? Euro USD. How do you open it up? You got to put your finger on it and hold it down. Watch when I hold it down, what happens. Oh, wait a minute. There. When you hold it down, it pops up the order window. If I want to do a new order, or if I want to open the chart on my phone, I can open up that graph chart to see where the candles are showing, right? And look exactly where the price action is happening. Or I can do symbols, right? I can look up different symbols that aren't on my actual pairs. And what's that? I don't know what simple view mode is. I guess that's changing my view. So now I'm going to click on new order. And guess what pops up? The actual order page asking me what I want my volume to be or my lot size. Now remember, lot size is how much you're wagering. So when you're in the penny section, right, 1.01 is pennies to us, but in lot size, that means 10 cents per pip, right? So you got to understand what pips are to know how much you're wagering. But a pip is a measurement of profit. So one decimal place up. Let me give you an example of a pip real quick, because I know this is going to be a question, and we want to make sure you understand what a pip is. So in this currency pair, the Euro US dollar, the price right now at the market price, this is what you would be buying or selling it at, right? Buying it at 1.1723. If you're selling it, you're going to sell it at 1.1720, okay? And that spread, the difference is what the broker makes, right? So whenever you take a trade, you're going to automatically be negative in the trade right away, because the house has to get paid first, right? Think about a casino. You don't ever participate in the games without the house getting their money. Same thing on the brokerage. When you make the trade, you're going to start negative, because that negative fee is what the bank charges. And every different pair has a different broker fee. So you have to really understand what your risk parameters are and what you actually are looking to bet with, because some pairs cost more to trade, right? The exotic pairs like the New Zealand, Australian dollar, right? Those are exotics. But the Euro USD, this is very, very large market. So it's the cheaper one to trade because there's so much money being poured into it. But the exotics actually have a much higher fee, and you can learn what that is also in your education modules. So in my volume here, I'm on $1.50 per pip. So what is a pip? Well, pips start at your second digit. So not the first. The first is what's called a pipette. But the second digit is where you start to count your pips, right? So if this moved up from 1723 to 1725, that would be 2 pips. If it went up to 30 from 23, right, that'd be 7 pips. If it went down, that's still, let's say it goes down to 1720, right, from 23, that's 3 pips. So remember, you're always counting pips on the second to the left digit. I mean, second from the right digit. This is where you count your pips, on that second digit. So let me use a different pair so you can see what I mean. Everything but the yen pair. The yen pair, you actually use the first digit. So in this case, right, the second digit is what? Where am I counting pips? At the 8. right? So if I were going up 10 pips, it would be 0.768. That's 10 pips. If I wanted to go down 10 pips, it would be 0.748. So you can see how you count pips. Now your volume, your lot size determines how much each pip costs, right? So if I'm at 0.1, I'm only wagering 10-cent pips. 0.2, 20%, 20 cents per pip. 0.3, 30 cents per pip. 0.4, 40 cents per pip. So if it moves 10 pips, 40 cents per pip times 10, that's $4, right? Now, if you're much, much more aggressive, you might go $4 a pip, right? You move that over one decimal place instead of being 0.4, right? We're doing 0.4. Now, the second digit over here on the lot size is your dollar per pip. See the middle number, the first digit to the right of the decimal is $1 per pip. So if I did 0.10, that's $1 per pip. 0.20, $2 per pip. 0.30, $3 per pip, right? So if it moved up 10 pips, that's $30, right? I'm sorry, yeah. $3 per pip times 10 pips, that's $30, right? So that's if you're at $3 per pip. Remember, the second decimal to the first decimal to the right where we are now, 30 cents to us traditionally, right? But it's 0.3 in lot size, that's $3 per pip. Now, when you get to the left side of the decimal, this is where the big boys play, right? When you're at a standard lot, this number is standard on the left side. That middle number to the first number to the right, first decimal to the right, is called a mini lot. And then the last decimal all the way to the right, that third one where you would count pennies, that's called a micro lot. So standard, mini, and micro, right? And micros are 10 cents per pip all the way up to 90 cents per pip. Then you start at the dollars at 0.1. 0.1 is what? Or 0.1 is $1 per pip. Then 0.2, $2 per pip. All the way up to what? $9 per pip at 0.90. That's $9 per pip. How did you get to $10 per pip? You go over to the other side of the decimal, right? And that's counting $10 per pip, one standard lot. So if it moves up 10 pips, this price point goes up to 107.67, right? That's up 10 pips, and I'm wagering that it's going up. So I hit a buy, and it gives me those 10 pips. Then I made $10 times 10 pips, which is $100, right? And then you get into the bigger money, right? Where you go 10 standard lots. That's $100 per pip, right? And then you can do, with a big purse, you could go $1,000 per pip. So if it moves up 10 pips, which it could do in about less than 5 minutes sometimes, you just made $100 per pip. Again, I'm sorry, that's $1,000 per pip. 10 pips, we made $10,000. So that's a crash course on lot size. I didn't want to get into all of that, but it's still important. You're starting out with a demo account, that's okay, because it's still important. You're gonna be able to see exactly what I'm talking about as you're putting those trades in. So let's go ahead and do one right now. I'm gonna do a live trade for this trade right here. The Euro USD has a stop loss for 1.17322. So where does the stop loss go? Well, first of all, we got to make sure we're in the right pair, right? That's not the right pair. So you got to find the pair that you're looking for. And here's how you add pairs. You right click if you're on your computer, or you just hold it down. Actually, you only hold it down. On your app, there's a little plus sign in the top right where all of your price pairs are. All your currency pairs are here, right? You see that? Hopefully you guys can see it. All your price pairs are right there. Say they give you one that you don't see in your list. There's a plus sign at the top of your app. Right at the top. When you hit that plus sign, it opens up Forex majors and other Forex price pairs, and that allows you to add more pairs to your list, just in case you don't have it. So in this case, what are we looking for? Oops, getting all these messages out the way. What are we looking for? We're looking for what? The Euro USD. That's the trade alert. I'm gonna pull it back up on the screen. Trade alert comes over from Tradera. You see it on your phone, right? You look up at the pair, you say, okay, it's a buy trade. They're telling you what to do, buy or sell. This is a buy for the Euro USD. I open up my MetaTrader 4, I find what? Euro USD. Look at that spread. That spread is 25. The spread is 25. That's 2.5 pips, right? So they're gonna take profit of 2.5 pips even before you make that trade. But even though we're gonna execute that trade, so hold it down, click new order, and on my app, I'm gonna just go, on my computer, I'm just gonna go up here, double click on Euro USD. Now I have that pair. I'm gonna put in my stop loss. Now, right now, from what I can tell, this trade is invalid, right? Because the stop loss is higher than where the price point is. The price point is at 1.172. Stop loss is at 1.173. So it's already higher and we're doing a buy. So this trade is invalid. But I'm going to put in a trade anyway. Let's just try to find another one that might fit. Well, we're not even going to do that. So let's just say this was a different alert, right? We're going to say that the stop loss was 1.17122, right? Which means we can actually put that in. 7122, right, would be what? That would be 10 pips shy of this. So I can actually execute that trade. My stop loss, 1.17122. Okay? So now if it goes down, well, actually, yeah. If it goes down, what? How many pips? It's got to go down 7 pips because it's at 1719 now, right? My stop loss, actually 1723, sorry. So it has to go down 10 pips to 1712, which is 11 pips down, right? Now to take profit, let's look at the take profit margin. So if it goes down 11 pips, it's going to take me out the trade in a loss. But if it goes up to, where were we? 1.178, right? That's a high take profit because that's almost 60 pips. So in this case, we're just going to go up, let's say 20 pips to 1741. So here we go. 1.1741 is our take profit. So if the price pair gets up to 1741, it'll take us out of the trade and put our profit in our bag. If the price goes down to 1712, which is 8 pips away, then we're going to lose this trade, okay? So here we go. I'm going to do a lot size of 0.10. So $1 per pip, okay? That's $1 per pip. We're going to execute a buy. And it just took the order. So now it shows up where? On my purchased orders. The reason it's showing in pink because I'm so close to the stop loss. So that kind of gives you a warning when it goes pink that you're really close to the stop loss. I set an 8 pip stop loss, which is really close, but that means you're only going to lose $8, right? Because we're doing dollar pips. Our lot size is 0.1. So that's how you set a trade in your MetaTrader 4. I'll do another one just so you can see it done again real quick. And let's just go up and grab a different price. So this is the Euro Canadian dollar, right? This is the buy on the Euro Canadian dollar. Stop loss 1.54876. All right, so we got to find the Euro Canadian dollar first. There it is. Double click. Let's see where the price action is at 1.5675. Yep, looks like we can take that buy, 1.54876. So we're a couple hundred pips away. Let's see, 5487 and 5675. Yeah, we're almost 200 pips away. So that probably, we need to change that one up too. So let's change this one to a closer parameter. Let's just take the, we're going to do the same thing. Let's look at the price pair first. The Euro Canadian. So how you see your chart is I can actually right click on that pair and see it says chart window. When I right click on it, it gives me options. I click on the chart window and it'll show me the chart and I can look at where that price pair is. So on the hourly time frame, it's kind of bullish, but it's been pulling back. So it's pulled back enough right there that I would say this is probably going to be bullish again. That hard fall there, and then an even harder fall there says it's probably going to go up from here. So let's do a buy on the Euro Canadian dollar. All right. Double click. We're going to go up. We'll take a loss. We'll stay with the same lot size. Well, let's do a bigger lot size. How about 0.20? So these are $2 pips, right? And we're going to do a stop loss at 10 pips down, which would be what? 1.5666. That would be about 10 pips from the sell point, right? 5676, 10 pips down. Remember, you start at the second digit. So 10 pips down would be 5666, right? So my stop loss, in case it goes backwards, we're doing a buy, so we expect it to go up. And if it goes backwards, it's going to stop me out at 5666. Okay, 10 pips away. To take profit, let's go 20 pips out. So we want to make more than we're losing all the time, right? 1.5699 would be 20 pips, right? Because we're at 5679. Add 20 pips to the 79, that would be 99. All right, we're at $2 a pip for our lot size. Let's execute the buy. Boom, it's ordered. Now, guess where it shows up? It shows up on your order list, and you can get out of these trades at any time just by clicking the X on your laptop. You notice how I started out negative on that trade too, by the way. That's the broker fee, right? It's already going down, so it might get stopped out, but it's okay because it's only a few dollars. So again, if you want to stop that trade and profit, right? Once you get on the plus side and you just say, hey, I'm gonna grab my money, just hit X, it X's you out of the trade. If you're on the app and you want to get out of a trade, you hold that same trade down just like you did to order it. You hold it down, it'll open up a window that says close your trade. And all you have to do is hit close twice. It takes you out of the trade, whether you're in profit or if in a loss. Either way, you can get out of the trade whenever you want. So I'm gonna pause right there, guys. I know that was a lot of information, but I know you guys have some questions. So I'll stop. I'll probably stop the recording right there too, because the question might go a little